Good morning, guys. Jack Leasing with StartupTrading.com. It's almost 9:45 here, 20th of March, and the title of the video is I think it was break and retest, confirm and retest. So by confirming we're breaking, I'm gonna go to this is the continuous contract I'm looking at. I'm just gonna quickly switch over to the N25. Just to show you guys what exactly it is I'm referring to, because this is the pattern that you'll actually see in the market over. It's very repeating pattern when it comes to fibs, but obviously we've had rollover, which can make charts look a little funky. On Monday, we began trading the June contract on the charts. The previous week was the March. But if you take the low of the June contract, the N1025 contract from last week, and draw it to Monday's high of this week, you got a 50% retracement on Tuesday. Okay, now we ended up breaking this 50% retracement. We pierced it, not by much. Like we basically broke that 61, came back to a test of the 61, rallied to the top of the range of resistance, which was also a target yesterday. And in the overnight, we rotated all the way back down to a retest. Now, sometimes what happens after we trade, like here, we have a long setup. That long setup breaks at 61. Okay, so then when it breaks at 61, there's a potential that shorts come into play. Shorts yesterday came into play. They had participation. And then we came back down and ripped through them into the end of the day and then sold off pretty hard. It was quite the vol. I mean, I did not trade until the announcement, which was better in my opinion. But anyway, we ended up breaking all the way back up through the short. And when you break all the way back up through that short, you confirm again the long. So this long basically re-engages with new buyers. So any buyers that would have been here, that would have been stopped out because their stop was below the 61 or whatever, they re-engage after the market has proven it has the ability to go higher by breaking it short. This is something you see on really all time frames. So this morning, big move down overnight, standard volatility. That's part of the reason I've been avoiding the open. You can trade it, but it's just stupid volatile. I mean, in sometimes one directional, sometimes two directional. Today, we drove down off the open, stuck that 19,755, and we have just ripped up to the midpoint here today. Now, based on the reaction that and the speed of which we've come out of it, that is the change. That's a change in. Oh, Pierre's calling me, which means my microphone is not working. That must mean my mic's not working, or I'm sharing the wrong thing.
Your mic's good. You're not sharing the right screen, I don't think.
Okay. All right. Thank you.
All right. Later. Yeah. Bye.
I'm sharing the wrong screen. Like when Perry's calling me and I'm doing my trade plan, I'm like, I know something's wrong. All right. I can switch to that screen. I am sharing the wrong screen. Too many screens. Too many screens. What is... Oh, this is the one I'm sharing. Is this the one I'm sharing? Yeah, this is the one I'm sharing. Okay. All right, let me go back through that a bit. Ah, damn it. So this move out of lows is a change in the speed of the market for sure. Relatively speaking, compared to that overnight move down, and it's coming from, now that you guys can see it, it's coming from a retest of this full halfway back. Now, if you draw on the continuous, it looks a little different, but this is the full halfway back long, and this is going to target all the way up at 20,365. Okay, so I do think, over the next couple days, we're going to be wanting to focus on long, and that's based on the reaction we are seeing this morning. Now, unless we have a pretty aggressive change in the speed of the market back to the downside, I am going to be leaning long based on this information and the tactical bit. So now it's a matter of finding an entry into the trend. Ideally speaking, I would absolutely love a halfway back long from today's low. We'll see if we can get it. We basically need 25 minutes of price action before we can even begin to assume we're going to know where this is going to stop. Otherwise, I'm just going to go to a 1 minute chart and see if I can observe where an extension is coming from. But right now, there's enough volatility here. I'm taking today's low too high, and I'm going to be stalking that for an entry. Okay, that's 19,840 right now. So I'm actually going to go ahead and place an order right there.
Order submitted.
Actually a couple points ahead, and hope we can come back into it. But that is what I have here for the NASDAQ. Now that I've shown you that on the NQM25, and we know that's where that level comes from, I will just go to the NQ contract, the continuous, to share. And the continuous contract, you can see actually it's a different variation, but we held the halfway back long on Tuesday. The overnight retest was the 50%, and this morning's low was a higher low. Totally different chart. Totally different chart. In fact, actually, I have this. This is the RTH halfway back too. So we're at the midpoint. This was actually yesterday's premium for the beginning of the day, but I would expect being at the midpoint, potentially finding that resistance level we want to see to get that full 50% retracement. And then today, I'm going to move up my premium level to the upper mid, which is like roughly around 2,000. And my discount is just going to remain right now the low of the day. I am not interested in shorting below the low of the day here. So, in this here, let me move this up. All right, so now it's just a matter of sitting, waiting, wishing I'll get that halfway back in the NASDAQ. I'll be waiting for it. Moving on to the ES. This is the ES M25 contract. Now, the M25 contract had a beautiful halfway back long on Tuesday. Lows of Thursday, too high. While the M25 was broken in the NASDAQ, it was never broken in the ES. So that's why you actually don't get that retest. We never broke it. We held it. We retested it. The 38% retracement is basically the low here. It is the same play in the ES as it is in the NQ. These markets, to me, like with that FOMC being out, that's off the table, right? The news is out. The price action where the bids came in is important. Now, at 9:55, if we're just that's 25 minutes in the day, that's maybe when we can get that pullback. If we don't pull back by 10:30, then I'm just gonna have to figure out maybe if there's a more aggressive draw. But this morning, even sometimes you see this action, and unless you were bidding that 50, this is like really tough to get in. You can buy these very aggressive extensions, but with the volatility we see in the morning, I think that's just kind of tough. That's why I've been avoiding the mornings. It's just I think it's a harder trade. I think there's just less trades in the later part of the day with a higher probability, which yesterday didn't trade till 2 o'clock, came in, took a trade for 50 points, and then 10 minutes later took another trade and ended up adding to that and closing that trade for more than 100 points after adding, I think, from my initial, and we continued from there. But As we go into the day here, that's the setups I'm looking for. Just these halfway backs for the day. I am bullish bias, and it would really take us to take out the open for me to change that bias at this point in time. So I'll share these levels with you guys in the room, and everybody have a great day. I'll jump on the squawker right after ending this video because we're already rocking and rolling with the open here this morning. Take care.